Hey, it's Ryan from the Option Income Advisor, and this is the trade of the day, fresh off of COVID, by the way. So apologies for my raspy voice today and having to put up with that. But I just want to get back in the saddle here. I think I picked an interesting, polarizing stock to kind of start the week off here. And so this is the trade of the day for August 3rd. 2021. And so Alibaba, again, it's a Chinese stock. I wanted to certainly try to take a look at a few of these because, just with the crazy regulatory, stuff going on with the Chinese government, a lot of these stocks have been trading everywhere. And so, I think one of the things we pride ourselves on is, trying to not leave any stone unturned, when looking for income opportunity. And I would say, certainly the larger stocks like Alibaba and, Tencent and some of these other stocks, they warrant, a look, as far as, the cash carried puts go. And I think this is the perfect example of, needing a margin of safety just for reasons outside of maybe fundamental reasons, with the business. Where you get that extra comfort with a cash secured put because you do have that extra margin of safety. And so I actually think this is one of the perfect stocks to be able to utilize here. It's got good volatility. I think it's got a good solid business. Again, assuming you can trust the Chinese government to not do anything crazy, but it is a stock that's been, I think, on a lot of people's radar. It's the second largest stock by market cap of all the Chinese stocks, and so it's in all the ETFs. So as money managers take exposure to Chinese stocks, everyone pretty much has exposure to Alibaba. So it's very widely held. I think. I don't think the Chinese regulators could do, what it did with some of these smaller education stocks that, really basically got shut down almost. They basically got, the government took control of them. And so not to say that can't happen in some form or fashion, but I think it's less likely in a stock, this large. But, I think some of that uncertainty has been, reflected in the stock already. And there's been some weird things with, Jack Ma, the founder of Alibaba, where, people, he did step down, and people say they haven't seen him since and stuff like that. So I don't know how much truth there is to some of that, but bottom line is, look, Alibaba is the Amazon of China, right? And so, I think it's a stock that you can't really ignore. And again, from my perspective, if I can get a margin of safety every time, I take a position in this stock, it makes me feel even more comfortable. And I think just how much it's pulled back, and I'll take a look at the chart here in a minute. It's just one of those. It's one of those things where you have to take a little bit of a flyer, but it's a calculated risk to say how much more, regulatory risk is there out there that hasn't been already priced in versus how good are the fundamentals of the company. And obviously, we love Amazon here. I think Alibaba has, very similar qualities and, obviously, much higher, or at least equal, growth perspective, going forward. So we'll take a look at all that. But I think this is a stock that you can't ignore. And again, we try to pride ourselves on not leaving any stone unturned, as we're looking at opportunities here for the triple income wheel. And so you take a look at from a safety perspective. Again, and you can argue whether or not you can trust the numbers, but we're just going to assume for this, analysis purpose that we can trust the numbers that are out there. But from a safety perspective, and we'll go through the numbers. I mean, it's pretty impressive what they've built, and just the operating history that they've had so far. And from a valuation perspective, which you wouldn't really expect to see with a high growth business like this, I mean it's trading at a pretty attractive valuation. And part of that's because of just how much it's pulled back. So the strike zone we're looking at here is 172 to 186. Again, it's a pretty volatile stock. We got a mean volatility of about 41%, which is kind of up there with a lot of the tech stocks we've been looking at recently. But we do have a pullback indicator of 10. And again, this is a stock that actually reports earnings. So if you're viewing this video on Tuesday, most likely they've already reported earnings in the morning. So kind of take that with a grain of salt as we're looking at these opportunities. But as you know, the cash secure put opportunity here is more of a longer term rinse and repeat situation. So it's really getting in at certain levels, not necessarily the exact options that I say, or highlight, but it's more of the concept, right? And so, kind of take that with a grain of salt. But I think this is setting up to be, decent opportunity. With that pullback indicator of 10, basically what it's saying is it's already pulled back quite a bit. And so if we've got a pullback indicator high like a 10, it's kind of insinuating that the stock's already pulled back quite a bit, so we don't need as big of a margin of safety as we might normally. So, this is again a stock that's pulled back about 38%, and this is probably a good time to kind of look at the chart because it's this is a stock that's in a downtrend, and most of these Chinese stocks are, but you start kind of looking at levels of support at this point, right? And so you can kind of see what I'm talking about here, right? So we peaked about 315-ish, 315, 320, just not too long ago. I mean, kind of back part of last year, right? So it's just been kind of down ever since. And this is really where some of the Chinese regulatory stuff started. We really started getting some scrutiny around, Jack Ma in general, as he was out kind of touting the business and, really taking shots at the Chinese government. And so he wasn't doing himself, or the company really any favors. And so there started to be these pressures, have been mounting. And so he stepped down. I don't know exactly where he stepped down, but, he stepped down at some point along this way. And, the stock's just kind of bounced around. And, so we've had, certain levels where it's come down to. And so you're really trying to figure out, okay, so, we're down X amount from the peak. Where are we going to get some support here? And I would say, this level here, where we had pulled back, kind of this was basically the pandemic low, was right around 175, 180. So that's the level I'm targeting right now. Is this pandemic low? Because the market or this stock was trading in a range, kind of up to that point. We kind of traded down, but then we really shot up because I think this company did benefit quite a bit from the pandemic, from being home. Just like Amazon did here, right? And so, you've got a situation here where, again, you're in a downtrend, which is not an ideal situation for me. I prefer to sell puts on stocks in uptrends. But again, you make an exception, from time to time, based on, just the fundamentals of the business and the valuation. And so, this is the level I'm targeting here. And I would say this, again, that 175, 180 level looks pretty good. And it kind of meshes right in where our strike zone is right now, which, again, always makes me feel good when I can find a good, solid long-term support level that I think might hold. That's kind of within our strike zone. So here's some additional possibilities. I think if it dips below that price, maybe you're talking 160. So probably in that 160 to 180 range would probably be pretty strong support. I mean, you see it bouncing around here, prior to 2020. So, we're going back pretty far now even to look at some of this stuff, but, you have to whenever, a stock kind of tanks like it has. And so what I'm looking at here, I mean, if we went down to 160, I mean, we'd be talking, 50% discount from its peak, right? So that's probably a little extreme. But again, that's kind of the low end of what I would say the kind of ranges that we'd be targeting. And so you'll see with some of the numbers I look at with the cash secured put, I'm kind of looking in that range, because it's just the range I feel pretty comfortable in. And so let's go back here. And so, again, from a valuation standpoint, you look at stocks like this and you wonder, how they're even trading at this level, because I think they're pretty attractive levels. And so, again, it comes down to, whether or not, you can trust the numbers, which again, we're making an assumption we can, and then, just putting almost a worst case scenario on, some of the regulatory stuff. And so when you look at it, you say, okay, well, on a forward basis, you're talking 3 times sales, which, again, compared to, similar growth trajectory technology stocks, even in the U.S., I mean, these are very attractive multiples. So 3 times sales on a forward basis, 16 times earnings. I mean, you won't find a stock growing at this rate, trading at that level. Again, enterprise value to EBITDA. I mean, these are just extremely attractive valuation multiples. And so, you take a look at that and say, what am I missing? Well, you're getting the discount because of, some of this regulatory issues, right? And so that's really why you're able to invest at this level. Because if everything was going well and there were no regulatory issues to worry about, I mean, this stock probably would be double. I mean, quite frankly, this stock probably would be double where it's at right now. And so that's the analysis you look at, right? And so that's why I love the cash secured put again, because we can even take a risk and take a bet and say, we're going to buy the stock at X price. If it dips down to that level, we feel pretty good about it. But, let's look at, some of these sales and EPS charts. Again, these are just very, very pretty charts. You see, sales growing like this. It's just, it's just, especially at this valuation level, this combination, again, outside of regulatory, issues, you won't find it. You won't find a chart like this with a valuation like this. You just won't, right? And so again, leave no stone unturned. I think this is one of those situations where, you take a little bit of a flyer there with the regulatory concern, because you're getting an unbelievable growth company that has just a great track record of growing sales and earnings at a really, really attractive rate. And so that's the analysis I'm going to keep coming back to here. But let's take a look at the cash secured puts. So given where we are, I've been looking at the both August and September right now. So we're kind of on the back end of investing, on the August side. And so, a lot of these stocks that are reporting earnings, I might still, go ahead and look at the August numbers. But, this is one I think you got to hold for a little bit. And so, I'm actually going to look at the September monthly options, which are about 46 days out. And so that's what we're going to look at for our analysis here. And so I would say this range. And again, this is a very, very liquid stock, liquid options. So, again, that's why it makes it even more attractive to kind of look at. I mean, we've got plenty of choices here. We got, again, good volatility. We got plenty of choices in the strike zone to take a look at. And so we're going to look at average monthly yield and margin of safety, and then we're going to look at obviously our delta as we analyze some of these trades. And so, for our base strategy, we're looking right around that 1% level on an average monthly basis. And so, it's this column here. And so I immediately kind of look down at this level, this 170. Again, this is this is in the low end of our strike zone, but I kind of like the fact that we can get a low delta trade here. I mean, you wouldn't expect it, given you got earnings coming up, and then you also have this regulatory concern. But we've got a really nice, I think, balance here where we can get a 15% margin of safety, we can get our 1% average monthly yield, and then we got a delta under 20. I mean, I think that's a phenomenal risk reward in my opinion. And so this is what I would use for the base, the 170. So we're trading right around 200. So again, that gives us a 15% margin of safety, and I just love that risk reward there. And if we're going conservative, we can probably go down to this like 155 level. So again, gets us a delta under 10. Margin of safety over 20%, which is great, and it gives us at least that 0.5% average monthly yield. And then if we're going to go to the high end, I think just given we got earnings coming up, and then we want some cushion here, just from a regulatory standpoint. So I would maybe choose this 185 for our aggressive. So that gets us almost that 2% margin average monthly yield. We still have a 7.5% margin of safety, and still a delta under 30, which is pretty good for that aggressive standpoint. So that's our aggressive base and conservative plays for Alibaba. And again, don't be shy about taking again a little bit of risk here. I think this is a really good trade-off, and that's the thing I love about cash secured puts is that you can look at a situation where you're not 100% confident, and you can say, look, even if I'm wrong, beyond where I think this stock could go, so giving yourself a margin of safety, you can still be right, right, and that's the beauty of it, right? This stock can trade all the way down to 170, and if it does, again, we're right in that range where you're down about 50% from its peak, and so that again goes into the analysis of how far could this stock really go down, just given the growth history and really what it what its business model is, right? I mean, it is the Amazon of China. I mean, it's got amazing growth prospects going forward, and if you can pick it up at these prices, it'd be pretty incredible. So that's our trade of the day. Again, this may not be for you if you are completely against investing in Chinese stocks, but I think if you're going to invest in one of those stocks in that space, I think you pick the biggest, most widely held stocks out there, and Alibaba definitely fits that bill. So, any questions? Let me know. That's our trade of the day. Take care.